Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, let's take a look at the overall market and actually what Jerome Powell said in the very important annual meeting of the Fed, which is basically just finished. Let's take a look at what he said. I put, in my opinion, the three most important points. It looks like that the market took that speech in a positive way. We see the Nasdaq is up. The S&P is up. Stocks that I like, and I told you in previous videos that I would like to buy even more at cheaper prices. It looks like that at the moment this is not the case. One of the first one is obviously Palantir, which today is flying, guys. Obviously, you know that I already have a significant position already built, but this is something that I would like to accumulate. But, well, you know what? Plus almost 4% today. So the Fed news on the inflation, it looks like that especially high multiple stocks are taking it in a positive way. But anyway, let's take a look at all of that. The only thing I ask you guys as always is please leave me a like. It's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so I'll try to be as quick as I can because I see that YouTube appreciates shorter videos. So previous video I talked to you about the old Michael Burry's idea, which is similar also to Ray Dalio's one. So this whole idea of big inflation, shorting the bond, all that kind of stuff, which obviously is against the Cathie Wood's idea. Now, in my opinion, I do not agree with Burry. I do not agree with Cathie Wood. I'm a little bit in between. I'm not catastrophic, massive hyperinflation, but I don't believe that inflation will come back to zero in just 5 months. So I'm a little bit in between. I just think that quality businesses, that they have a product, that they have a vision, will continue to do well no matter what. But I don't expect hyperinflation neither, okay? So I'm a little bit in between. But anyway, I try to write over there the three key points that in my opinion are important from what I have heard from Jerome Powell at the Fed speech that has just ended. The first one is that do not confuse tapering with increasing interest rates. Now, the first thing is that obviously tapering is that activity where you reduce asset purchases of bonds and mortgage-backed securities. At the moment is 80 million and 40 million respectively. Now, according to, as I showed you in previous video, Bank of America, this tapering stuff was switching from 80 to 70 and then from 40 to 35 when it comes to mortgage-backed securities. So it's not going to be like dropping that policy altogether, but it's going to be a slow reduction moving forward. So that's a thing, while increasing interest rates is a stronger policy. It goes on and really pushes the interest rate higher, like the next day, okay? So it's something that Powell says he doesn't see coming at this particular point. The second point is fiscal policies have lags. Now, this is something interesting that he said. And basically what he meant is that we have to be sure that this higher inflation is not temporary before acting. Because there is a big chance that this inflation, higher inflation, is just temporary. And this comes point 3, which I'm going to talk to you in just a second. And basically what he said is that when you increase interest rates, when you take a decision, you see the effect on that decision 4, 5, 6 months moving forward, okay, in the real economy, not in the stock market, in the real economy. So what he says is that, wait a minute, if that inflation is temporary, and I don't understand that it is temporary, so we go on with a tightening policy, increasing interest yields today. What if the inflation in 6 months is lower because it was temporary, but we now have another problem, okay? So we have higher interest yields where they are not needed. So that's something interesting that he said. He said that we have to be sure that inflation is not temporary before taking those decisions. So the next data in the next months, so a couple of quarters, inflation will be very important in order to then take a decision. If we see a decline, for example, we have seen 2 times in a row 5.4, so it looks like that inflation is starting to, I don't know, peak maybe. Okay, two data which are the same. I will not be surprised to see the next one which is lower than 5.4, okay, in order to create that bell in the inflation graph. Anyway, that's the second point. So we have to be sure that it's not temporary before acting. Otherwise, it's better that we don't do anything because it's going to be a problem moving forward. And this is related to the third point, which in my opinion is important. And he said a big chunk of inflation was seen in durable goods. Now, what that means is that it's correlated with this temporary inflation idea. Basically, if you see an increase in prices in demand of those durable goods, because everyone wanted to buy those stuff after the pandemic because of stimulus, because they had money to spend and stuff like that, people will not buy mobile phones, computers, washing machines, and all that kind of stuff every day. So it's something that they did all together, but now it's going to take a while before they will jump back and buy those things. As well as for cars, used cars and stuff like that. It talks also about the price of used cars. So it's something that it is all related. They have to understand whether the big part of inflation was related mostly to a big chunk in durable goods, which are not going to be bought every day, and a lack of supply, okay, from the shortage in supply due to the pandemic. So all of that still, according to Jerome Powell, it's not clear whether this inflation will be temporary or not. And he believes, probably from what he says, at least from what we understand, that he thinks is more likely that it is temporary than not. So the next inflation data will be absolutely fundamental in order to understand what the Fed will do. And the market actually believed Jerome Powell. We have seen previous annual speeches where the market just say, well, I don't believe you, and dropped, even though Powell was being positive. But this time the market took what he said in a positive way, meaning that the market kind of agrees with Powell so far. Okay, so we all have this kind of funny battle between Michael Burry and Katie Wood. It looks like that at the moment Michael Burry is being wrong. Okay, I don't know. I'm just completely impartial. I told you what I think about that. In my opinion, I am in between. Okay, not catastrophic, not even over optimistic. I'm just in this particular way in between. I just think that buying those companies that you think they are very great in terms of quality, in terms of products, in terms of all that kind of stuff will lead to positive returns in the long term. So I hope you find the video interesting, guys. I tried to be as quick as I could. Let's see if YouTube likes this. Anyway, subscribe to the channel if you want. And as always, guys, have a wonderful day.